Have you ever wondered how a single man could shake the entire financial system of a country? Well, it actually happened. Harshad Mehta, once celebrated as the big bull of the Indian stock market, was a mastermind who turned Dalal Street into his playground in the early 90s. But behind the glittering success was a deep web of fraudulent activities. In 1992, a staggering thousands of crores of financial scams came to light, exposing a flawed banking system and stock market manipulation that led to an unprecedented crash. The Sensex, which had skyrocketed to 4,467 points in April 1992, plummeted to 2,529 points by the end of the year, wiping out billions of rupees in investor wealth. Let's dive into one of the biggest financial scandals in India's history. How did it all start? Harshad Mehta, born in 1954 into a middle-class family in Gujarat, was an ambitious man with a knack for numbers. He moved to Mumbai to chase his dreams and started his career as a jobber in the Bombay Stock Exchange. His sharp financial acumen and risk-taking appetite soon turned him into a stock market maven. By the late 1980s, Harshad Mehta had mastered the art of leveraging the banking system to fuel his stock market ambitions. A loophole in the Indian banking system allowed him to siphon off massive amounts of money without being detected. By exploiting the interbank securities market, he convinced banks to issue fake bank receipts, BRs, and use them to secure large sums of money. A successful market journey. Mehta identified undervalued stocks and aggressively invested in them, causing a bull run in the Indian stock market. His investments in companies like ACC, Sterlite Industries, and Videocon saw unprecedented price surges. The price of ACC shares jumped from 200 Indian rupees to 9,000 Indian rupees per share, a shocking 4,400% increase in just a few months. In 1991 to 92 alone, the Sensex surged by nearly 274%, driven mainly by Mehta's market manipulations. During his peak, he lived a lavish lifestyle, owning multiple properties, a fleet of luxury cars like Lexus and Toyota Corolla, and rubbing shoulders with influential politicians and businessmen. But as they say, what goes up must come down. How did the scam unfold? While Harshad Mehta was at the peak of his success, investigative journalist Suketa Dalal exposed a shocking truth behind his financial empire in her April 1992 column in the Times of India. How did he manipulate the market? Mehta used fake bank receipts to obtain unsecured loans from banks, funneling the funds into the stock market. The scam came to light when State Bank of India reported missing funds worth 500 Indian rupees crores from its books. Over 15 banks, including National Housing Bank, UCO Bank, and Bank of Kerala, were directly impacted. Once the news broke, the entire market crashed overnight. Sensex fell from 4,467 to nearly 2,529 points in months. Stocks that were once touching the skies came tumbling down, and thousands of investors lost their life savings. What went wrong? For years, loopholes in India's financial system allowed unchecked fraudulent transactions. The collusion of banks, brokers, and financial institutions enabled Mehta's rise. But the exposure of his manipulations led to major upheavals in India's banking sector. Market confidence was shattered. The Sensex lost over 50% of its value, triggering panic among investors and financial institutions. The banking sector faced a liquidity crisis, forcing stricter financial regulations in India. A safe escape? Not at all. Harshad Mehta was arrested in November 1992 and faced 72 criminal charges and 600 civil suits related to fraud, cheating, and conspiracy. In 1999, he was convicted in a case related to SEBI and sentenced to 5 years in prison. The total value of the scam was estimated at 4,000 Indian rupees crore, which was equivalent to 2.5% of India's GDP at the time. Mehta spent years in legal battles, but his story took a tragic turn when he passed away in 2001 due to a heart ailment while in custody at Thane prison. Positive after effects. The Harshad Mehta scam led to major reforms in India's financial system. SEBI, Securities and Exchange Board of India, was strengthened as a regulatory watchdog to oversee stock market activities. Stricter banking norms were introduced to prevent large-scale financial fraud. Stock market reforms, including electronic trading and dematerialization of shares, were implemented to curb manipulation. Stricter compliance norms for banks and brokers ensured transparency in interbank transactions.